Hey guys, so in this video, like I said I was going to do earlier, we're going to talk about my current counts, my current count, some alternate counts that I'm seeing or that I've been made aware of, and then finally I'm going to talk about what I expect to see at the end of all this, at the bottom of the crash, and how I expect it to play out. Because that's a question I get a lot of times. A lot of people ask me, hey, what happens after this correction ends? Where do we go from there? So I'm going to talk a little bit about that as well today. I'm going to start off with the count. So in my previous pin post, I had the triangle count that you guys by now I'm sure are pretty familiar with, and we talked about how if we close below 6.4k, that particular count would likely be invalidated. We then went on to dip below 6.4k into the 6.2k region, and that is where I had my alternate count, which was this one right here, which was a non-triangle scenario, and we had that 5-wave count that I had. And I had said that that count should not go below 6.2k, and that if we go below 6.2k, that particular 5-wave structure here was thrown out as well. And the fact that we wicked down only $60 lower than the count made me question whether or not that was something that's excusable. Bitcoin is a highly leveraged market, so maybe a quick wick down that happened within 5 minutes would not invalidate the count. At least that's what my train of thought was. And so I was kind of holding out hope that, okay, maybe this count isn't invalid yet because I didn't see much else. And then we got this little bounce here. But as soon as we came crashing down below that point again, and we saw what we did today, we had to throw out that count. I had to admit that, yes, it was wrong. There was no way that we could dip that much below that 6.2k level. So at that point, we had to throw the count out. And that brings us to where we are today with the current count. And the current count, just like the last one, is a little bit similar. We have the extended first, second wave, a shorter third wave, fourth wave, and we're now getting our fifth wave. And whenever we get an extended first or an extra long first wave like this, it makes things very easy because the third wave is shorter, and we know that the fifth wave then has to be shorter than the third wave. Like sometimes we'll get like a short first wave, we'll get a pretty long third wave, and then we have to use fib levels and other factors to guess at what point our fifth wave will end. And there's no particular place that it can end. Maybe we'll get a regular first wave followed by a regular third wave, then an extended fifth. And at that point, the fifth wave can extend, 100%. It can go 161%. It can go 261%, and it can go 361% even extended. So it's nice that we have this type of a structure with an extended first because it makes it very easy for us to see when the bottom will be and gives us an invalidation point. So in this case, you take the fib level, fib measurement of the third wave here, and all I did was I took the size of the third wave here, starting from the top down to the bottom of the third wave right here, and then I projected it from the top of the fourth wave, and that gave us our invalidation point for the fifth wave, which was $5,200. And so at this point, we know that we can't get lower than $5,200 for this particular count, which is why I set that as my absolute lowest position, absolute lowest possible position for this next wave down. That being said, it's possible we get close, but I'd say it's more likely that we bounce a little bit before that. And there's a couple of other counts that I've seen online on Twitter. They're fairly similar. They're a little bit different, and there's a reason I'm going to explain to you now why I prefer this particular count. The other counts have us with a first wave, a second wave, and they have us currently in the third wave, which means we still have a fourth wave to go, and we're going to get one more fifth wave down to bring us into sub 4K levels, or definitely sub 5K, maybe mid 4K levels. And the only reason I'm not too fond of that particular count is when we talk about Elliott wave and the right look, we look at the size of each of the fractals, and they should be somewhat similar. So in this case, we have our 1, 2, 3, 4, 5 as our first wave. They have the second wave as an ABC structure right here, and then we have the third wave as a giant 1, 2, 3, 4, 5, which hasn't yet ended. And if we look at like the amount of time that it took to complete these waves, the first wave completed in a matter of 13 days. The second wave completed in a matter of 3 to 4 days, it looks like. And then we have this third wave that, if it's not yet complete, will be taking almost 40 days, which is 3 times as long as the first wave and 10 times as long as the second wave. And to me, with this type of account, this little wave here, because of how small it is compared to the size of these other waves, this looks a lot more like a subwave to me than a full second wave. And this first wave looks more like a subwave of this giant third wave than its own wave in and of itself, which is why I'm not too fond of this particular count. just because the size of these waves, they just don't look right to me. Not saying it's not valid, and 100% I could be wrong. I've been wrong before. I just was the other day with my last count. So I'm not saying that I'm better or that I'm right. I'm just saying that for me, this particular count makes more sense to me than us still being in the third wave down. That being said, with this particular third wave, this particular count here, with a low of 5.2 thousand, my targets, as I said earlier, and you guys saw in my post, were around 5.8 to 5.9 thousand as an initial bounce target, and then my second target was around 5.4 to 5.5 thousand levels. So we already hit my first target, and we did get a little bounce here. So we wicked down, hit 5,925, I believe, is what I saw earlier. Yeah, right over here. 5,925 is what we hit, right within my zone. I don't have the chart because I accidentally deleted it. You guys can see the original chart that I posted on my Twitter. It's my pin post right now, and it shows that I had targeted 5.9 to 6,100 as my target zone, which is, let's see here, it's going to be right here, 5.9 thousand to 6,100. And this was my first target zone for the bounce. And we very clearly dipped right to the bottom of it, didn't go past it, and did bounce. But that being said, the bounce is very weak. Now there's two possibilities here for this subwave countdown. If this were to be the fifth wave complete, I'd be looking at it as like a 1-2 giant third wave, extended third wave. We'd be getting our fourth popping up right now, and then we get a little fifth wave to complete right in the zone. That being said, I don't think that that is the more likely scenario. I believe that this structure right here is actually going to be our first subwave of 5, and that we will continue further down to that 5.4 to 5.5K target with something like this: a first, a second, a third, a fourth, and a fifth, right around my 5.4 to 5.5K target. So this is possible. It's possible that we bounce here and we continue up, but I'm not betting on it. I think that it's more likely this is going to be a little bounce here, maybe to 6.4 to 6.5 for our second wave right here. We're going to hit this resistance zone. As you can see, all this support is now resistance. We're going to hit that zone in our second wave. We're going to bounce down one more time for our third, our fourth, and our fifth. And this is going to be a little bit of a capitulation here as people are expecting this to hold. And then from this 5.4 to 5.5 thousand level, we'll then bounce up. And that's what I'm looking at right now. If you guys are aware, I did short at 6.7 thousand. Right around here, I opened shorts. I had a few more opened at 6.5 thousand, which is right around here, 6.5 and 6.7. And I caught this entire short. I closed my shorts and posted on Twitter that I did so right around $6,000 here, right into my bounce zone. And I'm now waiting to see what goes on here. If we do bounce to 6.3 to 6.4 and we reject here, I'm going to assume this was a second wave. And at that point, I'm going to open more shorts and catch this next wave down, and then close my shorts in that 5.4 to 5.5K level and open longs there for the next bounce up, with stop losses just beyond 5.2K, because that is the invalidation point for this count. We cannot go lower if this count is correct. So that's what my current thoughts are. And just a second, getting a phone call here. All right, so now you guys know my thoughts on the current situation, what my setup looks like, and what I'm aiming to do here. Another important thing to note here is if we do reject 6.3 to 6.4, and then we drop down, and if we don't cross below this last low here, and instead we bounce up, I'm gonna have stop losses set on my shorts here to flip them to longs, because if we do go down here, don't break this low and then head back up and break this last high, then it likely means that we've now started another impulse upwards, because if this was a wave down, we're not supposed to cross back up here. So if that means that if we do start another impulse upwards, I might start stacking longs here, flipping my shorts to longs with orders automatically. And then of course, if we do break 6.9 thousand right up here, that makes it official that a new wave up has started. So that's the point that I'll probably at least throw in more longs at around 6.9 thousand. And that doesn't necessarily mean that we're seeing a reversal. More likely than not, it's just going to be some sort of a bounce. So I'm going to be very cautious as well when I'm adding my longs here, because that doesn't necessarily mean we're going to go to the moon yet. It just means that we're having some sort of a bounce here. So that's my current position here for this count. Now let's look at the bigger picture again. I'm going to zoom out a little bit to the 4-hourly chart. Let's go let's go right down here. And so now the bigger picture for this particular account here, I'm going to get rid of all this stuff real quick to make it easier to see. Okay, so this larger picture count here, it's the W, X, and the Y. This would be the ABC to complete the Y. This would be the C wave, the 5-wave impulse that I have not going lower than 5.2 thousand to complete this Y. And at that point, we would have completed the WXY, and we'd see some sort of a larger bounce upwards. Now, when I talked to you about, I said I'd talk about how I'd expect this correction to end, or this crash to end. Now, if this really is a market crash, and I've said this before many times, in a market correction cycle, when we hit that despair level, and we hit that panic level, and we go to the bottom there, after that, there's a period of accumulation or consolidation, and it's during this point in time where volatility reaches its absolute minimum during this entire market cycle. We get very little volatility. A lot of people that were previously trading the market have now lost interest. They've hit that despair part, they've hit that panic part, and they've lost all hope in the market. And at this point, they're going to be exiting the market. So we're going to complete this. There's going to be a long period of consolidation. And at that point, they're going to be selling, and the people that are going to be buying are smart money that's loading up here at the absolute bottom when all hope is lost. And smart money will load up for a long period of time, and then the next bull run will start, and it will just shoot up. And that's what happened in the last market crash of, what was it, like 2013 or 2011 or whatever. And that particular accumulation cycle lasted for over 2 years, I believe. So it is going to take a pretty long period of time. So now, if we know that, and we already know that we've lost a lot of our bullish scenarios by crossing below this low here, we've closed below a lot of these lows here, then do we really think that the next bull cycle is going to occur in the next month or two? It doesn't seem very likely at all. If this really was a crash cycle, and we know that the last crash cycle, after the last crash cycle, it took 2 to 3 years to start a new bull run, do we think it's going to happen in the next 2 months? I'm highly doubtful. So how do we then explain this accumulation phase in terms of Elliott wave? How do we make sense of this prolonged low volatility move here that could extend for months on end before the next bull cycle starts? Well, the only way to explain it would be a continuation of a correction. So as you guys know, I have here drawn a W, X, and a Y. What we would see next, rather than a giant, fat impulse heading up, that's not going to be what we want to see if this really is a market crash and if this really is the end of it. Because like I said, there needs to be time to accumulate. And in a market crash, rocketing up again is not going to happen. So what we'd expect to see then is we expect to see this WXY turn into a WXYZ, which is pretty much just an extended correction. And it's pretty well known that these types of corrections tend to move sideways more than straight down. So it's characteristic of a long sideways movement. So we have here a W, X, and our Y, and then we'd expect to get another wave, another bounce. Like I said, it's going to be a fairly big bounce. It's going to be another X wave, and this is going to be another 3-wave structure. So more likely than not, it'll be another ABC structure, which is going to be another X wave. That can take us pretty high, and then this would be followed by the next Z wave, which is going to be another larger, maybe an ABC, or maybe a flat correction, maybe something like that, or let's see here. Or just an extra long ABC here going down like this, and that is going to give us a much longer period of, you could say, accumulation at the bottom. Or this X wave is probably not going to be that high. It's probably going to be a lot smaller. The X waves tend to only retrace. They have to retrace, or usually are, under 68% of the previous wave. So if this was our Y wave here, then our X wave would typically retrace a maximum of $9,000. So the X wave is going to be smaller. It's going to be something like that. And it's not unusual to see X waves that only trace up to 38% of the previous wave. So maybe we only get to 7.6 thousand on the bounce. But we would see an X wave like that, and that would be followed by then a smaller ABC, which would give us even more time to accumulate, or for the big guys to accumulate. And then this would be a very um, low volatility thing going on here. So yeah, so that would give us another extension of this correction. That'd give us another 4, 5, 6 months even, right, before the next bull run starts. Alternatively, there's another count, and this other count that I see as a little bit more viable is going to be this count right here, which is my ABC flat count. And if you guys have been following me, this was, I think, literally the first bearish major market count that I placed on my Twitter profile back when I had like a couple hundred followers. This was the original count that I had, and I said that I got rid of this count and taken it away as my primary and replaced it with a triangle because of this period of consolidation, the volume that was consolidating here. And I said, hey, this looks more like a triangle forming, and that's why I threw out this flat correction. Well, now we're seeing a spike in volume again. As you can see, volume starting to spike up here, and now that the triangle is thrown out, this goes back to being my primary count. This, like I said, is also a very likely possibility. Let's get rid of this stuff right now real quick. But this, like I said, is also a very viable possibility. And the alternate to this is the this count right here, where we have this first wave completing, second, third, fourth, and fifth. And this is definitely going to get us those sub 4K levels. We may have something like a ending diagonal or something like that doesn't make us go as deep. Or we can go a lot deeper down into like, sub 3K, 2K, even 1K levels. Technically, that's pretty valid because of this giant drop in this C wave. Even if it's like 0.618% of this A wave would still bring us down to, I think it's like the $1,000 range. So that's still a possibility. I'm not saying it's going to happen, but I'm not discounting it either. So if we do happen to bounce here, like I told you before, combo corrective waves tend to be more sideways than straight down. So if this is the correct count, then I would expect us to bounce here for the next X wave possibly, and then another combo. But if this particular wave is the correct count, then I would expect us to go a lot deeper than this current level here. I'd expect us to bounce for a wave 2, go even deeper for a wave 3, a wave 4, and then a wave 5 to sub 4K levels. So two very likely counts that I see here. This would be one count, which I would have us bouncing sooner and not going as deep, and then this would be the second count, which would have us bouncing at the same level. We still can't go below. This 5166 level here as well. So that's going to be right here. We still can't go below that before a bounce, but then after that bounce, we'll be heading a lot lower than we would if we are actually in a combo correction. At least that's my theory. So like I said over here, if we are in a combo correction and this is a crash, I'd expect us to move sideways for a longer period of time than just bouncing up from here and continuing up. So I'd expect us to get a WXYXZ to complete this correction. And now the very interesting thing here is that this is still a simple correction. We still just have an ABC here. It's not a complex correction. It's not a double combo like this is yet. So this count, if it's correct, has a lot more space and a lot more time to consolidate and accumulate at the bottom than this count does here. So this count is I would say the most bearish count, because this entire structure that we have here, this ABC, would actually be one giant W. We'd get an X and then more sideways consolidation. I'm not saying it's going to go that low. Don't look at the scaling here. It's not 100% accurate. Just trying to show you guys what I'm thinking in my head. So we get a W, we'd get another ABC, we'd get a, sorry, let me correct this real quick. Let's make this a WXYZ even. So this would be our W, we'd get an X wave to the 38 to 68% of this giant ABC down here. Then we'd get another Y wave. X, let me change this here. So W, this would be our X maybe. We'd get a Y, then we'd get another X, and then we get a Z wave to bring us to our absolute bottom. And now this is what would give us, like, let's see here. This would give us that long, I mean, look, we're going into 2020 here, so I'm not saying we're going to go into 2020, but my point that I'm trying to make here is that this is what would give us that long 2-year period possibly of consolidation and accumulation and insanely low volatility and that loss of hope and that despair and everything that everyone's talking about in a market cycle, this would be the absolute worst case scenario. And then, like I said, the alternate would be this guy here. We'd end a little bit sooner. We could still get an X, we could still get a Z, but then at that point we'd be done. Maybe in 2019, then we start the next bull run. In this case, we're not going to be so lucky. In this case, we have just a simple correction here at the moment. Just a simple correction, and that means that we can still get a lot more complex and still spend a lot more time down here at the bottom. So that is what I'm talking about. That's what I'm looking at when people are asking me what happens after we finish this last wave down here that we're working on. And like I've said from the beginning, these types of crashes, these types of corrections, they never end quickly. If it happens, it's going to take a long time to play out, which is why I'm showing you these double and triple combo corrective waves. These are mainly sideways movements. So after this initial drop down to these levels, these sub 4K levels, or maybe sub 5K levels, the next the next drawn out sideways movement will be going down, but it won't be going down at the rate that we went down here. Because it's a double and triple combo correction, it's going to move more sideways than straight down. So we'll be slowly getting to the bottom here, kind of making a U-shaped bottom, I would expect, before we pop up for the next bull run. So that is what we're looking at here, guys. So I've talked about my current count. I've talked about a possible alternate count, and I've also talked about what I'd expect to see at the end of this wave that we're looking at now. I've told you about my current setups, my current moves. That pretty much sums up everything that I wanted to talk to you guys about tonight. As always, if you guys like the video, please give me a like, subscribe to my channel, and stay tuned for more. Thanks.